Debbie Marcoux is licensed by the California Department of Business Oversight under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 094-1504, Georgia 69178, Illinois 031.005-8339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926, Heidi Slate Points, California, DBO 1666881.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, well, welcome to Mortgage Mom Radio. I'm Debbie Marcoux, and I don't have Heidi in yet. Heidi's going to come in a little bit, and we'll do some catching up with Mom. We're going to do this a little bit backwards today. But today I've got Jennifer Davidson with me. She is with the Escrow Experts. And Jennifer is our escrow officer. She does all of the transactions when you guys come to me and you are refinancing your home, or if you come to me and you want to buy a home from, a parent or a family member, and we're doing a gift of equity. Jennifer is our girl. She gets it done. So I wanted to introduce everybody to Jennifer because you guys hear from her quite a bit. You see a lot of emails. She does a lot of title work. We talked to Joe Pena last week with title. So you guys should know what that is all about. If you don't, go back to our YouTube channel and watch our episode from last week with Joe Pena. So Jen, welcome. Thank you so much for being here.
Thanks for having me on.
Of course. So the reason I'm doing these, I've kind of been having different guests come on, and you went out to a lot of our workshops when we used to do them in person, and we haven't done those in quite some time. And then obviously with COVID hitting, that's just basically been an off limits kind of thing. But you used to come out and talk about escrow and kind of educate people what it was and what is it that you do and why are they spending their money? What is that escrow fee for? So I thought that it was pretty cool to have you on to talk about what escrow is. And obviously there's a lot of escrow states, and then there's actually title states, and then there's attorney states. And we've got people all over the country watching us. So I know that you are only doing escrow in California, but do you know off the top of your head, which states mostly are escrow states?
I know Arizona, California. I know Texas is an attorney state. Georgia's an attorney state. I believe Florida might be an escrow state. I'm not sure. I know you're going to find a lot of the East Coast states are going to be attorney states. Illinois.
Did you guys hear that? Did you hear the accent? She called it Illinois instead of Illinois. I love it. She is our hometown girl, Matt. She's our hometown girl.
The A might come out there a little bit here and there. So, but yeah, so I don't really know how many escrow states there are. You're going to find more of them on the West Coast than anywhere, and more attorney states on the East Coast. I think just with the way that our economies and states are set up.
Yep, absolutely. And, Georgia is an attorney state, and they're a pretty specific attorney state. There's also like Illinois or Illinois. But, in Illinois, you can actually choose not to work with an attorney and just do everything straight through title, where I've done a lot of transactions recently in Georgia that's almost all attorney state. So, this episode is really geared towards escrow, because escrow you wouldn't find in those states. So I know I've got a lot of listeners that are all over the country. And if you guys are in a state that is not an escrow state, then you can ignore us. You don't have to listen to the whole show. But, let's talk about escrow, because that is something that a lot of people say, why am I paying this escrow fee? What is it for? What are they doing? So, kind of start from the beginning. When somebody says, well, why am I paying you?
So we're a neutral third party. Our most important job and our fiduciary duty is to the principals of the transaction. So in a refinance, our principal is the borrower. And that is our duty, is to ensure that their money is dispersed accordingly. And that's why a lender would have us as well, because they're instructing us through their loan documents how to appropriately disperse the funds. So the reason you're paying us is to ensure that your money is handled appropriately, it's dispersed accordingly, and that all of the lender's rules and regulations are followed when it comes to payment of property taxes, insurance, how your loans are paid off, and that type of stuff. So when it comes to sale transactions, we're a neutral third party, again, for money, but we also are there to make sure that the buyer and seller both agree on everything, and that everything that's handled from a financial standpoint, credits, and different items like termite payments and things like that. We are the middle person. We are the buck stops with us. So if the buyer doesn't agree, then we don't do it. If the seller doesn't agree, then we don't do it. We ensure and come in and do a conflict resolution to get to a point where both parties are in agreement to whatever that situation may be.
So you are the neutral third party. You are taking
I
instructions from each side, and if each side doesn't agree, then what, right?
Then I come in and figure it out.
Right.
Yeah. So I tell people a lot of times that, conflict resolution is, especially in purchase and sale transactions, is probably our number one priority, is to then find a solution. I'm a solution oriented person. Yes, we have a problem. Yes, there's probably a fault somewhere. Let's move past the fault. Let's find the solution that's going to benefit both parties. What's the fastest, least expensive solution that we can do?
Okay. And I love that, because it is very important to have that neutral person. One person can't come in and say, that's it, cancel the transaction. You can't cancel a transaction unless you have agreement on both sides.
Correct.
You can't, somebody can't come in and say, well, they're going to pay me so add this credit, give it to me.
Correct.
Right. You need to have everybody's agreement before you're going to make that happen. So,
Correct.
I think that that's really, really good for everybody to understand that escrow is there as the neutral third party, looking out for your best interest and making sure that everything that is in the contract is being adhered to.
Correct.
Right.
Yes.
So, talk a little bit about, a refinance. So we've got escrow for refinance, and, what is it that you're doing with refinance? Talk to us about, kind of the importance there.
Right. So when it comes to a refinance, especially here in California, the way it works is we're the main point of contact between the lender, the title company, and the borrower. Again, kind of that neutral third party. There's just less people involved in the transaction than you would have a purchase transaction. So we are going to be direct communication with the title company. We're going to ensure that the title is cleared. I know you heard from Joe last week, who I love to work with, by the way. He's wonderful. And so, we look at that preliminary title report. We see what liens and judgments are on there. We order those demands with the information that the borrower provides to the lender. And we make sure that we get them, we make sure that they're up to date, and then we prepare the closing statement. So we're really giving you that list of information, what's being debited, and what is your final amount. And then, of course, the most important part is, if you're getting money, we're the ones that are going to give you your money at the end of the transaction. We make sure that the documents are recorded. And again, it's all done through the title company, but we're the ones that are handling everything, sending it to the title company, telling the title company to record, and then balancing our file with all of the figures that we get from the lender and title, taking the money, and then sending it out.
So explain really quick, and I think a lot of people get really confused. So when somebody goes in under contract and they're sending their earnest money deposit at the very beginning of the transaction, and they think they're sending money to the escrow company. Are they sending it to you and it is going into an escrow account that is their escrow account, or is it actually going to the title company who is holding it? Where is the money going to?
It comes to escrow. So the title company, the only funds the title company will ever receive are from the lender. And the reason why the lender sends their funding wire to the title company is because the title company does what's called a lender's title insurance policy, which I'm sure you might have spoke about last week. So the lender, since they're getting title insurance, wants to send the money to the title company. But any other funds, specifically from a buyer or a seller, if for some reason they were bringing in money because they were short to close, over encumbered for some reason, comes into escrow, and it's held in our trust account. It's a non-interest bearing account. It's one bank account. There's not a bank account for every single transaction, but it's all in one account. And then we delineate that within our banking system based on the escrow number that's provided to the transaction.
Gotcha. So what do we got going on, Matt? We got anybody actually watching today?
So yeah, we have a few comments. Deborah on Facebook says good evening.
Good. Hey, nice to see you, Deborah. Thanks for joining us again.
Heather on YouTube says hi, everyone.
All right, Heather. Thanks for watching.
And we have a question. I'm going to skip over it real quick just to get to the other comment. Erica on YouTube says hello, and she says no sound there, but everything looks good on this end, so hopefully that's... Oh, never mind. She found it.
Okay.
And then back on Facebook, Heidi says, hi, ladies. And Jen, what do the settlement fees include?
So the escrow fees are our fee, and it's really for liability. Because as a company who handles money, we take on a great financial risk because we can be sued. We are heavily regulated by the state of California, heavily regulated with regards to our finances to ensure that we're not taking in your funds and going to Vegas or
Oh, come
using
on.
or
Come on.
or using them. I mean, believe me, when people call me and say, am I wiring to you? I'm like, I could give you my personal bank account, but I'd be in jail. So yeah, so money laundering. And that's why it's super important when you are working with an escrow company that you ensure that they are regulated by the state, and they can be regulated by a few different state entities, whether it's the Department of Insurance, Department of Business Oversight, or the Department of Real Estate. But you want to make sure that they're insured and make sure that they have their proper insurance and all of the things that go along with it. But yeah, so the fee that you're paying to us is really not only for the work that we're going to do for the transaction with ordering the payoff statements, handling the loan documents, coordinating the signing, but I think the biggest part is the liability and risk that we take in taking in money and dispersing it. Every time we take $1 and we release $1, there comes a liability with that. I forgot to mention when we first talked about what escrow holders do as well is we are the holder of record. We are required, by the state to hold our records for 5 years. So if there is any dispute, anytime you go to mediation or arbitration, or for some reason if it went to an actual jury trial, we're going to be subpoenaed for those records, whether we're named in the lawsuit or not. So that's why you'll always call me at tax time. I need my closing statement. Well, we are required to hold that and provide that to you for 5 years. So,
well, and let's not mention, I mean, your escrow fee also goes into all of the work that you're doing. You're ordering payoff demands
correct.
on loans, and you're
Right.
getting the documents from the lender,
Correct.
and you're getting the, everything signed and done
Right.
right and notarized. I mean, you guys are busy. I mean,
Yeah.
we're busy doing the loan, but you guys are busy as well doing your other part of the, piece of the project, right?
Correct. And a lot of people, the escrow fees are more expensive for sale and purchase transactions because they're based on the purchase price. Because the higher purchase price you have, the more liability you have, the more that basically the seller or buyer have the ability to sue for. I always think of Judge Judy, who says you're never going to get more than you're damaged for. Well, if you're selling or buying a $5 billion property, that's $5 million that you could be suing for, and we could be sued for, or something of that nature. So that's why you're going to be paying much more of an escrow fee on a $5 million property than you would on a $50,000 property.
Right. No, that is so great. So I think Heidi had another question, didn't she? Like, I can see stuff popping up, but I can't actually read it. I'm old. I'm getting there. I probably need to put some reading glasses on during the show.
You need some cheaters.
I need some cheaters. Yeah.
Well, just to recap a little bit on YouTube, our dad says hi from Cicero.
All right. Well, dad's in the house. Love it.
And Houseboat Billy says Houseboat Billy is in the house.
Nice. It's good to see you, Houseboat Billy. You weren't in last week.
And Heidi says or asks, when a borrower pays off a mortgage or other debts, how are they paid off? Wait, did I read that right? Yeah. And then she said, this is fun.
Yeah.
Yeah.
So Jen, let me kind of explain her question, and then I'm going to let you answer how it works. So there are a lot of times that we do refinances for clients where we're paying off their debts through the loan, or if they're doing a purchase, they need to pay the debt off in order to qualify for the loan. And that's all happening through escrow, as well as the current mortgage, if you're doing a refinance, has to be paid off, and the seller's mortgage has to be paid off. So what Heidi's asking is, how do you do those disbursements? Like, what happens, right?
Yeah. So if the mortgage or the lien, judgment, whatever it may be, is on the preliminary title report, then the title company actually makes that payoff, because part of their title insurance is to ensure that the chain of title is free and clear. Whether it's a refinance, the lender wants to know that those are paid off and they're in first lien position, or if it's a sale transaction, the buyer obviously does not want to assume any of the seller's debt. And so the title company makes those payoffs. If they're what we call an escrow accommodation payoffs, where it's debt reduction, you're getting a loan, you're taking some money out of your house, you're paying off your debt, or you're purchasing your property, and to get your debt to loan income ratio to a certain, point where the underwriter approves that you have to pay off some debt, we pay those through escrow. And so we need to get those statements of accounts from the borrower, and then we mail them out, unless the borrower gets us wire instructions or an overnight address. I mean, again, we take instruction. I just say yes when people tell me what to do, as long as obviously it's legal and within my parameters of doing it. But we take those statements of accounts that you get, from City Cards every month. We look at the PO box, we put the account number, and we make those payments. We have some borrowers who go above and beyond the extra mile, and they get wire instructions, or they get an overnight address because they want, something other than regular US mail, which we're totally fine with doing. But we really just take exactly what is given to us and pay off per those statements.
So, and I'm happy that Heidi actually brought that up because, and obviously I would love to have her in our little chat box right now, but it seems like we can't quite get the three of us in there with all of us nice and clear for everybody to see. So she's doing comments right now and we'll get her in a little bit later. But I'm happy that she brought that up because we've actually had, issues in the past where we've had clients pay things off and the money doesn't make it there and the payment is due and, they're kind of kicking and screaming. So one thing I want to make sure that everybody understands is that when she gets that bill and she disperses the money to your credit card or your car loan, she is sending a check, regular mail, old school. It could take 4 or 5 days to get there. It could take, or longer. It could take 3, 4, 5 days, business days for the bank to actually take the check, deposit it. They usually wait for it to clear and then they show your account paid. So you want to make sure that if that is the direction that you want to go, that you're continuing to make minimum payments due. If you make a payment and she sent out the payoff amount and you've overpaid your account, you're going to get a refund. But don't let your credit go bad because the check didn't show up before the payment was due. So I think that that's really good. And a lot of times you could, like you said, you could overnight the check, you could wire the funds, but they need to tell you that that's what they want you to do. If they don't tell you that, then the standard procedure is cut a check and mail it out.
100%. I mean, I would love to say that I had all the time in the world to be able to take every file and do like the fastest thing, for that person. It's just not possible for us to be able to do that. So we just have to take at face value what that statement of account says and go from there. And we're willing to work with any borrower who wants to give us additional information. We're great. I mean, we don't charge wire fees on our end, so it's not going to cost the borrower any money. We don't charge overnight fees. So if you guys want it there quicker, I would suggest it. If it was me who was doing it personally, I would be overnighting it so I know it was there. It may still take them 3 or 4 business days to credit it to your account, like Debbie said, because they do wait for a third-party check to clear. But at least Joe Smith signed for it and it got to the location, and we're not just waiting for the U.S. Post Office to deliver it.
To get it there.
And no knock to the U.S. Post Office, but
well,
especially come December, Christmas time. I mean, I can't tell you the amount of checks that I have to recut, during the heavy volume of mailing season. And it's human error. There's nothing you can do about it.
Yeah.
So.
Nope, absolutely. So being an escrow officer, what are some of the things, last week we talked with Joe about the statement of information and how important that is and getting that done in time, maybe up front a little early instead of waiting till the end when things can come back that we didn't know about. But what are some of the things for you? Like, I run into, hey, this is something that happens all the time with mine. Don't do this. What is something or a piece of advice that you could give somebody that you could say like, hey, this kind of happens quite frequently. So make sure that you do this instead.
So with a refinance transaction, I am right on with Joe. Like the sooner we can do a statement of information, the better it is, because that's just not a fun phone call to make the day we're funding a loan that we found something. Number 2 is just letting us know when you make a payment so that we can update the payoff statement. You always are going to get your money back, but you're sure going to get it faster from me than you are from the loan that you're getting paid off. That can take a few weeks to get, and we'd much rather give you more money back, than less. Probably the same with property taxes, since right now we're in tax season.
I was just going to bring that up. I'm like, they're here. Talk about it.
It's tax season. So, if you're going to make that payment, make it probably online, quickest.
Yes.
Get your loan officer, or if you're in direct contact with me, your escrow officer, just get us that information so that we can let the title company know they've been paid and we don't have to account for it. Property tax overpayment takes a long time to get back.
Forever.
And the way that it works is it's first come. So whichever payment gets there first is applied first, and then the refund will happen. So like, for example, if you made your tax payment today and we closed escrow today and your payment got there first, then my payment came, it could take months before I get that payment back to be able to give back to you. So it's just good to really over communicate with your loan officer, your escrow officer, on what payments you're making. And I think, we don't see this too often, but if you have IRS tax liens, got to get on top of those out of the gate. The IRS takes a very long time, and it can be done. Payoffs can be done, subordinations can be done. It's just the IRS, and it takes a long time. So the sooner we can start working on that and getting the paperwork over to the IRS, the quicker that we can make sure that that all comes in, because you'll have to have all of that to get your loan done. So.
Well, and once again, like Heidi's question, what is your settlement fee for? Well, it's for all these things that we're talking about, right? We're talking about you order the subordination when somebody has a line of credit that's going to stay on title, and you know, you're ordering the demands when it is a lien that is against title. I mean, you're doing a lot of those things for us. Obviously, I have to know about it. I have to know it's there. I'm asking you to order it. You're bringing it to me. You're telling me how much. Then I'm talking to the borrower and I'm saying, what are we going to do? We're going to increase your loan amount. We're going to pay these off. You're going to bring it in, your own money out of pocket. But if we don't know about those things, so to kind of go back a little bit, last week we talked about the statement of information. And again, you know, there's people that are listening right now. There's people listening on Saturday morning on Go Country, and they maybe didn't hear the show last week. So last week was a show all about title. The statement of information is basically, to sum it up easily, it's a background check that the title company is going to do while they're underwriting the insurance policy to give us the title insurance to be able to close your loan. So if things come up that are against you, like judgments and liens, they're going to find those, and then we've got to get those cleared up. So if you don't complete the statement of information for Jennifer when she sends you out your escrow package, then she can't send it to title for them to start their background check and underwriting of your title insurance policy. So if it doesn't happen until the very end and we've got you cleared to close for a loan, and then all of a sudden, boom, there's something we didn't know about, like an IRS lien, now we're kind of at square one, because by the time we get everything back from the IRS, every document in your file is expired, your rate lock is expired, your loan documents are expired, everything is pretty much, we're basically starting a brand new loan over. So I'm really happy that you brought that up. And that's why I asked you, like, what do you see all of the time, right?
Yeah. I mean, we don't see them too often, but if I have to think, like, what is my worst case scenario, is getting a prelim with an IRS lien. And no knock, I had one personally myself, paid it off, great. But I had to refinance. I had to get a subordination. The IRS pre-COVID was 14 business days from the date that you faxed in all of the documentation that they needed. And that's if their fax machine worked. So.
And what is it now during COVID?
I have not had to I've literally, you're jinxing me here, because I have not had to deal with one since COVID. So I can't tell you. But
all right, knock on wood.
Knock on wood, yeah. I'm like, I haven't had to since COVID, but pre-COVID it was 14 business days. And I mean, it's hard. It's definitely hard. And the borrowers have to be very involved, because they may have to call, they may have to call as the borrower. I'm a third party. No one wants to tell me anything. No one wants to do anything for me, because I'm a third party. So sometimes, when it comes to those types of liens, the borrowers are definitely involved. Another thing I thought of is, if you do have a judgment and you've been working with the creditor on trying to get a payoff, even a reduced settlement amount, I do not want to call them as escrow, because the minute that they hear you're refinancing or selling your house, they want full payment. And I would hate to blow that deal for you. So again, it's just about communication, especially with either your loan officer or your escrow officer. We're going to find out about this stuff because your social security number is involved. There's no way to hide it. And there's no judgment from any of us. We just want to work the solution to get to the end product. And that is to either get you your home, sell you your home, or get you a better rate. So
like tactfully said. I love it. I love it.
I've seen it all. Everybody calls me and they're like, I'm sorry. I'm like, don't apologize to me. I said, I've seen it. Divorce situations, short sales, foreclosures, you name it. I've seen it. I'm solution oriented. Let's just figure out what we can do and keep on going
and get it done. So I just want to introduce everybody again, in case you're getting in late and you didn't hear the introduction. I have Jennifer Davidson with the Escrow Experts on with us. She does all of the refinance transactions for me and my team. I just absolutely love her. Jen, you've been my escrow officer for how long now? How many? I mean, it's been years.
I was going to say, I want to say 8.
Yeah, 8,
I don't know
9.
if we're coming up on. Yeah, I don't know if we're coming up close to to 10, a long time.
Yeah, it's been a long time. And she is just absolutely amazing. And like we've told you before with loans, the more communication that you can have, the better. There's nothing that you can hide that we're not going to find. So just be honest with us up front. Tell us about it. Let us get started on it. Let us start doing the research and the education and figuring out what we need to do. And maybe we need to change loans. Maybe we need to get that paid off. Maybe you need to start calling and trying to negotiate a payoff without Jen calling from escrow to do that. So, you know, this is great. I love that you're giving us the education, and I appreciate that you're on the show. You're amazing as always. Matt is throwing his hand up in the air like he's got something to tell me.
Yeah, I didn't want to get too far off here. Heather on YouTube said, since you're talking about taxes, can you explain what a supplemental tax bill is, and is that something escrow pays, or do homeowners pay it?
That's a great question, and one I get all the time. I think I have like 2 or 3 emails from buyers who purchased about 6 months ago who has it. So in California, taxes come out in the fall. There's 2 tax bills or two payments you have to make for the tax bill. One that's due in the fall, delinquent December 10th. The second installment is due in the beginning of the year, delinquent April 10th. If you purchase a house in California, it takes the tax assessor a good 6 months to reassess your property taxes.
Oh, go higher.
I'm gonna say I say 6. That's normally
It
what we see,
depends
but
on the county, man. There are some, I got to tell you, there's some that I've been doing recently where these people have owned this home for over a year.
wow,
They've already received an escrow refund from their current lender because they think that they're impounding too much. The lender has dropped their mortgage payment to lower it so that they're only collecting what they think that the bill should be. And then all of a sudden, boom, they get that supplemental. So this is really important for everybody that has just recently bought a house within the last year and a half. Listen.
So you're going to get your, let's just, for example, I bought my house, let's just say beginning of 2020, before COVID. And I just got my new tax bill. And I look at it and I go, I wonder why it has the seller's name on it. That's because the taxes haven't been reassessed. But what'll happen is in January, I will get a nice, lovely bill from the tax assessor. It's a one-time bill, and it's a reassessment of the taxes. So basically, it's going to be the difference between what the seller's bill is and what your bill should be. So if the seller's bill was $5,000, but after reassessment, yours should have been $7,000, you're going to pay $2,000 as a one-time bill. Now, that bill is not paid through escrow because it comes long after your escrow has closed. And then if you're talking about escrow as in an escrow or impound account with your lender, they are.
Oh no, we lost her. We totally lost her. Oh, there
she's
she is.
back.
She came back. No.
Somebody called me.
Hey, this we thought it was just the connection again. I mean, this is
No,
pretty
it's
common
someone
right
called
now
me.
with COVID and Zooms and everything that's going on. Like we lose everybody all the time. I thought you were gone. So
No,
awesome.
I'm here.
Awesome.
I'm here.
All right.
Someone called me. So anyways, so back to the supplemental bill. So escrow, as in the closing agent who handled your purchase transaction, does not pay it because the bill will not be out for a while. And then the escrow or impound account with your lender is not going to pay that either. It is the responsibility of the homeowner. So just when you go to purchase, just remember that that will be cash out of your pocket that you pay for. And then the following bill that comes out, so for me, in my example, in 2021, will be the normal bulk tax bill, and then your impound account with your lender will pay that.
Right.
So.
And one thing being the lender on the lending side, to make sure that you guys all kind of understand that, is that when we close the loan on a purchase, we are actually estimating what we believe that your property taxes are going to be reassessed to right out the gate. And we are collecting that every single month in your monthly payment from you. So when your mortgage company only pays the seller's bill, then they think that your taxes are actually going to be lower than what they will eventually be. So what you can do when you get that supplemental bill is you can call your lender, let them know that you got the supplemental bill, and I'd say 95% of the servicers will allow you to send them your supplemental bill, and they will pay it from your escrow account for you, because we have already been collecting, assuming that reassessment was going to happen. and they already paid a lower amount than what they should have. So there should be excess funds. The very worst case scenario is that you do pay that supplemental bill on your own. But when they actually go take a look back, they do it once every 12 months to your escrow impound account. And that's where this gets all really confusing, right? You're an escrow company, you've got an escrow in your mortgage, they're totally different things. But your escrow impound account once a year will be reassessed. And they will go through it and look at what have they paid out, how much of your bill's been, did your homeowner's insurance policy get more expensive? And then they will actually either increase your monthly payment because things got more expensive, or they will bring your payment down, or they will leave your payment the same because we did a darn good job when we closed the loan. If there's too much money in your impound account and we have been collecting too much from you, they will send you a refund. So if at the end of the year there was a supplemental bill and you just went ahead and paid it, and they did not pay out enough in taxes from your account within that 12-month period, they are going to send you a refund. So you will eventually get it back from the money that we set up out the gates day one for your payment to cover that amount. So there's a lot going on with it, though, and a lot of people do get really confused. The other thing that I hear quite a bit is, why do they keep increasing my taxes? So, and most of the time it comes around because of the supplementals. And so I like that what you told everybody was the supplemental happens one time. They reassess you one time. That big giant jump happens one time from what the seller paid for the home and their property taxes to what you've paid for the home and your property taxes. After that, they do reassess annually, but there is a cap on how much that they can actually increase your bill. And I'm going to be honest with you, I haven't looked it up in a really long time. I want to say it's 2%.
Prop 13, right? I'm pretty sure it's 2%.
I believe it's 2%. I will actually double check that, and I will get you guys a firm answer on that next week. I'll actually give you guys the answer. But I do believe that it's only 2% that they are allowed to actually reassess. They can't do more than that. If they did more than that every single year, then when you sign up for your mortgage and you qualify for your loan, you're just getting set up to fail. You wouldn't be able to continue to make those payments and be able to afford them if every single year they brought you up more than that 2%. But a lot of people will ask me, well, I got a 30-year mortgage. Why does my payment keep changing? Well, if your homeowner's insurance, which we're going to have an insurance agent on within the next couple of weeks as well, because we've had a lot of fires and we've seen a lot of policies go up recently and get more expensive. If your insurance company changes your premium on your policy, we have to cover that somehow. So your payment's going to go up a little bit to make sure that your impound account has enough money to cover the bill due. Your taxes are going to change just a little tiny bit every year. So you're going to have to pay just a little tiny bit more. But your 30-year fixed rate is not going to change. Your principal and interest is not going to change. So I think that gets confusing for a lot of people because they think, well, I signed up for this. It's supposed to be 30 years. It never changes. It's going to change, but it's the variable things that we can't predict as lenders. We don't know how much that you'll be reassessed. We don't know that your insurance company is going to increase your policy price.
I also think of it this way, like unless your loan program requires the impound, you're voluntarily choosing to have that, which I have in mind because I prefer not to have a tax bill every year that I have to save for myself. I know the lender's taking care of it. It's just one less thing as a working mom of 2 small kids that I have to worry about. So that's a thing too. You know what I mean? Like just knowing what you're signing up for when you get to that point of like, I do want to have those taxes because I just want someone else to pay for it. Someone else is saving the money for me. I don't have to think about it. It just takes it off my list of to-dos. So.
Right. Oh no, absolutely. And I totally agree with you. So let me ask you another question. So let's say that we fund the loan today. And let's pretend that it's Orange County so it can record same day. So everybody out there listening, Los Angeles County, you guys cannot record same day. It's fund one day, record the next day. Orange County does same day. Riverside and San Bernardino, I believe, are same day. Ventura County, same day. I think really Los Angeles, I'm pretty sure San Diego's same day, right? So I'm pretty sure it's Los Angeles that can't seem to get their you-know-what together. But let's just pretend for the majority of the counties in California, your fund you loan records same day. When do the payoffs for the current mortgage go out? So let's say we're talking refi right now. How fast does that mortgage get paid off after the loan has funded?
It's typically the next business day, and that's because the title company cannot send the payoffs out until after the recording confirmation is in, and 90% of payoffs are done via wire transfer, and the Fed closes at 3 p.m. on Pacific Standard Time, and the Federal Reserve is who the wire transfers go through. So it's really a timing thing. So it really just depends. So I tell everybody just to anticipate that your file will be dispersed, including payoffs, any creditor payments, if you're receiving cash, will all be done the next business day.
Okay, so that's the next thing that I wanted to ask you, because I got to tell you, it really, really, really depends on the escrow company. And, especially when it's a purchase, I don't get to select who we're working with. I don't get to say, well, we're going through Jennifer Davidson at the Escrow Experts because she's amazing. I get whoever it is that comes in on that contract. And I've seen many, many escrow companies not balance their file for a couple of days, sometimes longer. So as a borrower or even a seller, who is expecting escrow is closed, is there an actual legal time frame that you guys are set to, that you need to balance the file, get everything prepared, get the checks in the mail, whether it's just a $2,000 refund from overpayment, or what is there a time frame that's actually required?
So the lender actually has the requirement. And I'm not sure if you noticed, because I know you get 100 million emails, but with the company that you're working with, I have to send a final closing statement, and I have to put on there the majority of the funds were dispersed on this date. There's other lenders that I work with that they make me sign something, and I have to disperse the majority of the funds within 24 hours. Some lenders require it within 48 hours, or I'm penalized as an escrow company. And if that was part of, I believe, TRID that came out a few years ago, some federal regulations that came in to try to regulate real estate 50 statewide instead of each individual state. So yes, I mean, we do have to disperse the majority of the funds within a certain amount of time, or I end up having to pay a per diem to the buyer, or the lender is going to require me to do what's called a cure.
Right. So let's just let's say, for example, you're a seller and you're selling your home, and escrow closed today. When should they expect to actually get their proceeds in hand?
Tomorrow. And if we're wire transferring them, our company regulations are that we verbally verify the wire instructions with the seller, even if you sign them in front of me, even if you sign them with a notary. I have to call and verbally verify them, and I always do that right before I wire transfer the funds. It's just part of wire fraud. There is a lot of wire fraud. So
all right,
we just want to ensure that we have the correct information. We're sending it to the right place, because the minute the wire leaves our account, it's very difficult to get it back. So
well, okay, so wire fraud is actually kind of a big deal right now. I mean, it's in, and you guys, you have it all over your email. Every email that you send me, it's in your signature. Every email
are out to get your money.
They really are. Every email that I see from every escrow company has got some sort of blurb about it. You guys don't send wire instructions through escrow. You need to actually call them and talk to them and give them to them. So let's talk a little bit about wire fraud, so that somebody can be, cautious. I mean, we've got a lot of people that are buying homes, and it's the first time they've ever bought a home. It's the first time they've ever dealt with an escrow company. Their real estate agent is saying, hurry up and wire money to your escrow company for your earnest money. You got to do it. Go to your bank right now. So let's talk a little bit about maybe what are some things that would be a red flag to someone to not do. Okay.
Never take anything at face value. So if you're in a transaction, let's say we're dealing with a purchase transaction, I'm going to send you wire instructions, and they're always going to come in an encrypted format, which means it's some sort of a secure email. We use a Microsoft encryption, but every escrow company or title company uses their own Barracuda or some sort of encryption service that you have to sign into to access that. I would never, ever send a wire without calling somebody. I want to call the escrow company and talk to somebody at the escrow company, verify that what I received in that email is correct. Most escrow companies do not put their account numbers on their wire instructions. And I know it's very frustrating because we're all busy and you probably didn't look through the form to the very end and you're sitting in the bank with a teller and you're like, where's the damn account number? My
It's
language.
not
But
here. It's not
yeah,
here.
it's not here. Oh, I get these calls and they're calling me over and over again. And I'm like, I'm on the phone. Hold on.
Right, right. I'm on the phone with somebody else, or I'm in the middle of a signing, or
yeah. And so, yes, you have to call. I have to talk to you. I have to give you the information. So I just don't take anything at face value, and know that most escrow companies, their account is never going to change. So if you are in a purchase transaction and that transaction is a 60-day long transaction, and you get an email from what you think is the escrow company, because there are people that can take our email address and it looks the same. It looks totally the same. You think it's coming from me. And they say, oh, our wire instructions have changed. Please see the attached. They haven't. Call. Just call. If you get wire information from your agent, call. We see, and not to, I mean, real estate agents are obviously our clients, and I'm grateful for them. But they use Gmail, they use Yahoo, they are using less secure. And so my rule of thumb, and it's not my company policy, but I say it is that I don't send wire instructions to agents. I want to talk direct to the buyer. I want to give them, hi, this is who I am. Here's your information. Please call me and talk to me. I'm a real person. You're going to talk to me directly. Very rarely do you ever talk to anyone else when it comes to wiring your money. It's too important to me that you send it to the right place, because with a wire transfer, the minute that it leaves the Federal Reserve and it's deposited into the end account, so whether it be my account or the fraudulent account, you cannot get it back unless the account holder gives it back to you or the FBI gets involved. And so the company that I work for has a partial ownership by Fidelity National Financial. And when we hear the yearly numbers of wire fraud that happens, it's in the millions of dollars. Millions of dollars. And how much they've gotten back is much less than what they actually sent out. So It's just very important that you're calling and talking to people, and not to scare you. Wires are great. They're the easiest form of getting money to somebody, where it becomes liquid the minute it hits our account. It's just being proactive and being safe.
Right. So I've also had, this could be the last question that I'm going to ask you, and then I'm going to let you go, because I've had you for 40 minutes and oh my gosh, I appreciate it so much. You have no idea. And this has been great. But I have a lot of people that will want to write a check to the escrow company. And I know that that can be questionable, because checks need to clear. And if it doesn't clear, if you guys close the loan and the check then bounced, and you know, it's kind of a mess. So what's your rule of thumb on, which is why we typically prefer wire. But what is your rule of thumb with personal check? And then also, a lot of people think cashier's check is better, but there's still a little bit with cashier. Right. So what is your rule of thumb with, somebody that wants to actually write a check?
So we actually all abide by the California Good Funds Law. That's title and escrow, anyone who works, no matter who you're regulated by in the state. And that is, we have to have good funds on file. So if you're going to write me a personal check, I have to wait at least 3 business days. We probably should stretch it out, if the amount that you're giving me is large, to 5 to 7 business days to ensure it clears. There can be a stop payment placed on a check after the fact, but that's why we wait that long for it to clear, because once it clears, then you can't place a stop payment on it. So when it comes to purchase transactions, we are okay with accepting the initial deposit in a personal check, so long as the purchase contract allows for that. Now, there is a specific section in the California RPA, number 3 on the first page, that says how you can give your funds.
Get it, girl, get it.
It defaults to, I know way too much about this stuff. It defaults to wires. But, some sellers are okay with a personal check. And then when it comes to closing funds for refinances, my personal rule of thumb, if it's under $1,000, I'm okay to take a personal check, especially, I have no problem asking, Deb, you or your processors, hey, are we good? We're good with this, right?
Right. Have you verified funds? We've seen bank statements. We know what's in there. Yeah.
Exactly. Yeah. Over $1,000, I'd much rather have a wire transfer. We can't accept a cashier's check. That takes a day to clear, because it has to go through our depositing system, and all banking deposits clear overnight. But we can do that. But cashier's checks can be fraudulent as well, unfortunately. So that's just another thing we have to be wary about. So that's why we always default to wire transfer. But work with your escrow officer, find out what each company's policies are different. Some are more strict than others. Again, under $1,000, I'm good with a check, especially with a refi. We've got a 3-day right of rescission on an owner occupied property. I know I'm going to have 3 days before it clears. And my relationships with my clients, I trust that they're
Right.
doing good business. So,
Well, Jennifer Davidson with the Escrow Experts, a lot of people don't know this, but you actually, as the borrower, if it's a refinance, have the right to select the services that you use. So most companies, you'll call up, you'll start your loan with your loan officer, and they'll just automatically open escrow and open title with the, the companies that they have really good relationships with. And it really does seem to make the transactions go smoother when you're all working as a team and you have worked with this person numerous times before. But as a borrower, you do have the right to select who you want to use for your escrow and for your title. So make sure that you keep that in mind. Also, as a buyer, a lot of times those contracts are written and you don't know any better. And it says, who's going to be escrow, and you just put on there, seller's choice, right? But I got to tell you guys, if you're going to get into any kind of a transaction, look for Jennifer. Seriously. Write her in your contract. Tell your loan officer, if you're not working with me and Heidi, that that's who you want to use. You absolutely will not be disappointed. I cannot say enough. I mean, you have just been amazing. I wouldn't have this relationship with you for the amount of years that we've been doing it if you were not fantastic at your job. I mean, you are truly, I can't do my job without you. And so you've got to be as good as me and vice versa. And you are just absolutely amazing. So I hope that everybody that's out there listening, I know we've got real estate agents that do listen to the show, and maybe they need to reach out to Jennifer and talk to Jennifer and see if they might want to start a relationship with her, especially right now with this whole COVID environment. Nobody's going to escrow officers, like the actual office really anymore. Everybody's doing signings with notaries at home. So it's not really that it's necessary that your location is within the direct area of where the home is located. So I just really hope that you guys all take note of Jen and look up the Escrow Experts. I'm sure you guys have a website, right?
we sure do. escrowexperts.com, and you can find my contact information. Anybody have questions, just let me know. I mean, I get through my day of crazy escrow knowing that I get to help people, and that's what I'm here for. So any questions, just let me know. Any help, advice, Deb knows, just let me know. I'm here to help. So.
I do. So how are we doing, Matt? Do we have any? I can see stuff popping up again. I can't read them.
Yeah. So over on Twitch, J Evolution is back. Says, "Hey Matt, hey Debbie."
Nice, we love it.
And hi, because nobody ever says hi to me.
Hi Matt.
And Heidi says, "Jen, this has been so informative." And she said, "You should just keep going. You're doing great." And call Jen.
Well, that's just Heidi not wanting to have to get in and do any part of the show. She's trying to weasel her little way out. All right. So what is this? I haven't even mentioned it one time yet during the show because we've just been like going and going, which is great. And the Mortgage Mom Radio is all about education and advice. And we're trying to bring things to people that they don't know. And we're trying to give them information that helps them with whatever the mortgage transaction is that they're doing or the real estate transaction that they're doing. And, the more education that they have, a little bit easier that it is to understand or to anticipate what's going to happen, maybe not be as bottled up with energy, as nervous or worried, which, there's a lot that is already happening with emotions when you're trying to buy a house or you're trying to do that refinance and you're hoping it's going to close and get the cash out to pay for your daughter's wedding. And, there's a lot of things that happen. And so that's why we do this show. That's why it's Mortgage Mom Radio. If you guys are enjoying it, we really want you guys to go to our YouTube channel and click on that subscribe button, check mark that, or click on the bell, whatever it's called, our little notification. We're live every Wednesday at 5 on YouTube and Facebook, and we want you guys to watch, and we want you to put your questions into the feed, and we want you to answer them for you. If you are listening to us on Saturday morning on Go Country, thank you so much. We love that you guys listen. But if you miss any part of it, I know you guys are jumping in your car, you're driving to work, you're getting out, you only get a bit of the show, you don't get to hear the whole thing. Check out our podcast if you guys like to listen to podcasts, or go to YouTube and watch, what we did. Watch the whole show. You get to see my face. You get to see Jen today. I'm going to make Heidi get in. She doesn't think she's getting in, but I'm going to make her get in. But, that is what we're here for. We want you guys to call us. We want you to ask us questions. Matt answers the phone on Saturday mornings. He gets people on my calendar. You're more than welcome to ask for Heidi or Carrie or Larry, whoever you guys want to talk to, whoever you prefer. And he's going to get you on the calendar to talk to us and do that consultation. So feel free, please give us a call. It's 844-935-3634. And Matt will get you scheduled on the calendar to talk to me, Heidi, Carrie, Larry, whoever it is that you want to talk to. Jen, how do they get a hold of you? What's the number for your office?
So my phone number is my direct line to my office is 949-458-3919. So that's my bat line. That gets right to me. If I don't answer, it's because I'm on the phone, which is a lot of the time, but leave a message. I can get right back to you. Again, you can go to theescrowexperts.com. That's going to have all my company information. It's got a bio about me. We'll have my email address there. You'll get to see my cute assistant, Patrice, who is my right-hand lady, who helps me get my work done. And
she does, and she's awesome. We deal with Patrice a lot. Yeah.
And
it's so funny because you guys, you went through, and we all do, right? You went through quite a few assistants at the beginning, and then you finally find that one where you guys are like two peas in a pod. It's like me and Heidi, right? Yeah. And so it's so funny because watching her evolve over time since she's been with you, now all of a sudden her emails when she responds are starting to look like yours. Right? She's starting to talk like you, and she's starting to sound like you, and I even have to look sometimes and go, oh, that was Patrice.
She's wonderful. And so she's definitely, yes, you should see. She's like, what should I say? Like this. Here's what you say. Just use this format email. This is what you do. Don't say anything else. So yeah, you learn, it's really awesome. And you can't, you have to have support staff.
You do.
And they probably are the reason why you can be as good as you can be,
Oh, absolutely. If you don't have the right support behind you, or you don't have the right team, like I mentioned, if I'm not working with you and I'm working with a different escrow company and they don't know how I work, and you just don't, it just doesn't flow the same, right? When I open up and let's face it, when Heidi opens the escrow.
I was going to laugh there for a second and be like, okay, Deb.
Yeah. Let's face it. Yeah. So, when Heidi opens the escrow, not Deb, you guys have your way that you do it. She knows exactly what you need from her to go ahead and get that opened. You know exactly what to do to get it open with Joe, to get the title insurance started. Yeah. It's just this really nice, smooth transaction. And if we didn't have that support going on either side, we wouldn't be as good or efficient as we are. I got to tell you, we're pretty good rocking women over here.
100%. You get stuff done.
Oh, you do too. I'm saying, like, me and you, we're rocking it. A little bit of girl power going on. Pretty proud of it.
There
but
you go. Yeah.
I think that Heidi was actually able to weasel her way out of this show, because now we're getting close to the end of the hour. But
she did comment and said you're running out of time.
I did see. Yeah, I see a couple of comments from her. Like I said, I can't read them. So
yeah, no, she said whatever. I love the show.
Yeah. Do we have anything else going on before we cut it?
Soleil jumped in, said, showed up late, going to have to check this out after the session. Love you guys.
Thank you so much. Appreciate it. We're actually starting to get people that are watching us each week that are not my Aunt Pam, my Aunt Lori,
and Dad.
my dad. We're actually starting to get people that are real people, real names, real users. We're loving it. Again, guys, I hope that you really enjoyed the show. I hope we're bringing you valuable education. We're here to help you in any way that we can. It's Mortgage Mom Radio everywhere. You guys go to I don't know, Google, or does anybody use Explorer anymore? I guess they do. But wherever you like to search, Chrome.
7.9% of internet users use Internet Explorer.
7.8%
of internet users use Internet Explorer.
Does
Chrome
anybody
is 68%.
use Yahoo anymore?
Well, that's not an Explorer. That's a search engine.
Oh, okay. Whatever. Oh, okay. So, okay.
Oh, Google.
Sorry.
Oh, I see what you're saying.
Yeah. Google, Yahoo, I don't know, whatever. All right, so I get where you're going. Mr. Matt's got to make me look bad.
No, I just happened to read that number, and I'm like, I can throw a stat out there.
Oh, that's funny. I love it. But for any of you guys, you put in Mortgage Mom Radio into the internet, you're going to find us. You can find our website. You can find us on YouTube. You can find our podcast. Anywhere you like to listen to podcasts, we're there. Find us on Facebook, like the page if you're more of a Facebook follower. We've got an Instagram account that we've been really bad at keeping up, but Matt promises he's going to start actually working on that and giving us a little bit more couple more posts than
Yeah.
maybe 2 in a year. So we're going to start trying to work on that Instagram a little bit more. But anywhere you guys need us, you can find us. Just search us, send us a message, send me an email. You guys want to know how to get a hold of Jen, I'll get you to her. Jen, you've been great. You've been fantastic. I appreciate it so much. And Heidi's going to do the whole show next week. She usually does a whole show with me. We've just been having problems because we've been doing guests, right? And I think it's been great. We've had a lot of fantastic people on with a lot of fantastic information, but we've been having a really hard time trying to get the internet to actually keep 3 people in the room clear enough that you can actually see and hear, and people aren't freezing and the sound isn't going in and out. So Mikey, my little gaming genius, has told us that there is a way to make this happen, and that he is going to show it to us. So I'm hoping that next week we can have all 3 of us on, Heidi in the room, nice and clear, good sound, and we can keep it rolling. So, and we good? We got anything else? Nothing more to do?
Well, Heidi and Heather were having a little back and forth on YouTube, but Heidi did say, "I'm still here," and Heidi said, "Mikey, stay out of it."
All right. Well, if you guys are listening on Go Country on Saturday morning, you guys tune in Wednesdays live at 5 on YouTube. Put those messages in the chat. We'd love to hear from you. We'd love to hear that you watch the show or you listen to the show. And we want to answer those questions for you. Jen, you've been great. Thank you so much. Appreciate it. And I hope everybody has a fantastic night. And if you're listening Saturday, I hope you guys all have a great weekend. And we'll be back next week.